This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial endowment expert, Harold Siegel. We're taping our show on February 22nd, a Thursday, at 8:42 a.m. Mountain Time. Connect with Harold. His website is rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Telephone number 1-800-432-1022. 1-800-432-1022. We'll talk about some of the opportunities that Harold has for you when it comes to investing in hard assets a little later in the show. As we tape today's program, US dollar at 89.77, Canadian dollar 78.67, gold at 13.26, silver at 16.57, gold to silver ratio is at 80. In our free weekly newsletter, Mike Baloney did a 2-minute video, and he talks about the gold to silver ratio. He says when it gets to 80, that is a great time to be seriously looking at silver. Platinum, $990, palladium, $1,022, WTI, $61.92, Brent, $65.57, Nat Gas, $265, Bitcoin USA, in US dollars, $9,950. In Canadian dollars, $12,655. And rough numbers on the Dow as we start the day. Dow at 24,974, S&P at 2,712, NASDAQ at 7,260, and the TSX at 15,580. And last week when we were doing the podcast, obviously it was a somber show. Harold, a Canadian who lives in the United States between Florida and has a residence in Colorado as well. Where he lives in Florida is basically 2 blocks from the school that the shooting took place last week. And it's Parkland, Florida, and obviously people were absolutely devastated with the loss of lives and the shooting. And it even became more devastating when we found out the FBI did not follow up on the lead that was given to them that we talked about on the podcast. But Harold, that aside, I know CNN last night, they did a town hall. There are a lot of angry people, and they want change when it comes to gun laws in the United States.
Well, it's certainly warranted, I've got to tell you. It's been a very, very rough week. Obviously, it happened on Valentine's Day, and 17 people were killed. 2 of them teachers, the rest of them children. 13 more were injured. And the fact is that there's been so many of these throughout the United States over these past few years that it's becoming ridiculous. You know, the fact is that in the United States, the politicians are so tuned into money and getting money from the NRA that they're just not doing anything. They're not doing anything to help the situation. It appears that loss of young lives is secondary to money and being in the, in the gun-making business. So at this particular time, it's been a horrible week, Randy. There's been several funerals. So everybody in Parkland, which is a small, very upscale neighborhood, everybody is just depressed. I mean, we had 17 of our children taken away from us, and many of those people we know. So the fact is that there's got to be some change, and I'm hoping that this time that this situation is so severe that they will actually change. But, I have very, very little faith in politicians. Everything to them is a process, and the fact is that it appears that, lives of our children, who are our future, are secondary to money and, the right to bear arms. Now, I have no problem with being able to protect yourself, but a 17-year-old boy or kid that was able to go out and legally buy an AR-15 assault rifle without any type of background checks or anything is the most ridiculous thing that we could ever possibly imagine. And this is happening all of the time. The fact is that they don't need assault rifles. There's no reason for it. There's no reason for a 17-year-old to be able to own a gun like that and then to be able to one day walk into a school and kill 17 people. It's just a horrific act. Everybody is upset. Everybody is depressed. You can't walk down the street or go to the grocery store or restaurant in Parkland without everybody just nodding to each other. It's just is just an understood statement that we're all so upset by this situation, Randy. And I got to tell you, just watching it on television and hearing the kids and talking and what they're prepared to do, these kids are growing up very, very quickly. And this is something that they shouldn't have to deal with. But I got to say that I'm very proud of them because they've really taken it upon themselves to try to make a difference. And the fact is that, you're going to be fighting against politicians like Trump and Rubio and these type of guys. And I got to tell you, Randy, it was embarrassing yesterday when we were watching the kids that went up to Tallahassee, to demonstrate and to talk about change and gun laws and things like that. And Marco Rubio was there, who is our senator. And basically, the kids asked him outright, "Are you still going to take money from the NRA?" And he wouldn't answer. So if that doesn't tell the whole story, I don't know what does. So again, just a very, very difficult week. Very, very sad for everybody that was affected in such a negative way. And I don't think Parkland or these kids will ever be the same Parkland. I've lived here for almost 25 years, and it's the safest town in all of the state of Florida until this happened. So thank you very much for asking. And I do want to say to all of our listeners and friends in Canada, I must have had 50 phone calls this week from friends and listeners to the show that were concerned and just wanted to give their best. And I can't tell you how much we appreciate that. And, it's just a very, very difficult time, Randy. So thank you very much for the interest. And again, thank you to all of our listeners who reached out to us this week to give us their best. We love you very, very much.
I know people that were involved with Columbine, the kids, all these years later, when they heard about the shooting in Parkland, they had bad flashbacks. This is something that people carry with them for a lifetime. But it seems, and I could be wrong, I'm looking at it more from a Canadian perspective, looking down to the United States, looking south. It looks like people are really mad. And the kids, some of them are so articulate and putting politicians on the spot in a way that adults won't do it. And I think there might be a chance of change, but the gun lobby is massive in the United States. And it's a right to bear arms, but it's not a right to own a bazooka. That's sort of my feeling, although I'm very respectful of the U.S. laws and traditions and their history. But still, no one needs a gun of that sort. It's absolutely absurd.
You bet, Randy. Anyways, with all that happening, the market's traded basically in a range this week. Every time we get above 1350, which is a minor resistance level for gold. The major resistance level is 1380. I've mentioned that several times. When we get close to 1380, the market tends to back off, but that's a normal situation for gold. Until it breaks the 1380 level and closes 2 days in a row above 1380, then we'll get a confirmation that this market's going to break out. Now, I think gold is going to break out for a few reasons, but the major reason, two of them, is one is the strength of the U.S. dollar, where the U.S. dollar and gold are definitely tied into each other. When the U.S. dollar is strong, gold is weak, which was evident by 1999 and 2000, when gold was at the lowest level at $250, but the U.S. dollar was at its highest level. So when the U.S. dollar is strong, gold tends to weaken. But at this particular point, the U.S. dollar has come down substantially from its highs. In actual fact, when President Trump came into office, the U.S. dollar rallied to 103, went above par and traded at the 103 level. But then, as President Trump, continued in office and a lot of confidence was lost, and evidently he's adopting a weaker dollar policy, which makes very little sense because they're raising interest rates in the States. So, that counteracts each other. When you raise interest rates, you're strengthening your dollar. So how do you raise interest rates and actually see your dollar falling? To me, that smells of manipulation, because these are action and reaction markets. I've been in and have traded commodities for pretty well 35 years. It's literally impossible for you to raise interest rates and have the U.S. dollar fall. So they have to be manipulating the market in a sense in order to accomplish what they want. I guess Trump is looking towards a weaker dollar will give U.S. exports become much more attractive. In Canada, even though the U.S. dollar is strengthening, is weakening, so is the Canadian dollar. So you got a phenomenon going on at the same time that the U.S. dollar, which is the reserve currency, so when you hear that the U.S. dollar is strong and moving higher, it's moving higher against a basket of foreign currencies like the euro, the Canadian dollar, the Aussie dollar, the Swiss franc, the British pound, those type of things. So those type of currencies. So when the U.S. dollar is strengthening, it's strengthening against those currencies. So how in the world, if the U.S. dollar is dropping, which it is at this particular point, is the Canadian dollar dropping with it? Because the Canadian government also wants a weaker dollar policy because they want our commodities and everything that we export to be cheaper and much more attractive. So this is a phenomenon that we have going on at this particular point. Now you've also got the situation where Russia has basically admitted somewhat to tampering with the elections. And as they get deeper and deeper and deeper into what really happened, it's certainly appearing that there has been some skullduggery. And if they do actually find, and there's a very good chance that they will, that Trump was behind this, and I would not doubt for a second that he was, we could literally see a huge problem in the United States. We could see a president that's going to be impeached for lying and doing what he did. And at that point there, it's possible, very, very possible, that gold could take off and run to 14, 15, 1,600 or higher. Don't forget, in 2011, during this 11-year bull market that we were in, we saw gold go all the way to 1920. So again, if the situation is dire enough and the U.S. dollar backs off and there's a geopolitical situation involving Trump and that type of thing, we got a market that could skyrocket. So we do have opportunities in gold. Now, we don't want our clients to leverage gold in any way, shape, or form. We don't want you to leverage anything. What we do want you to look at is the protection that gold can give you that can offset all bad things that are happening in the marketplace. You know, a few weeks ago, we saw a 1,600 downturn in one day in a couple hours in the Dow. Back in 2008, when we had massive problems, financial issues with mortgages and things like that in the U.S., we saw the Dow drop from 14,000 to 6,500. So these type of devastating moves are certainly possible. During that whole financial fiasco, while the stock market was plummeting all the way down to 6,500, don't forget gold really took off and ran. So as things get more difficult throughout the world, gold is a safe haven. Gold is the type of asset that, number one, is very liquid. You could trade it. It trades 24 hours a day. And the way that we offer gold to our clients is in kilo bar form. So you could buy from us a kilo of gold, and there is no commission and there's no spread between the bid and the ask. So you're basically buying at the last sale. There's no spread, and most companies will charge a spread of a few percent between the bid and the ask. That's how they make their money, and then they charge you a commission. We don't do any of that. We want our clients to make money, and we want our clients to make a lot of money on this next run up in gold. So you can literally buy kilos of gold that we can deliver directly to you, that you will own outright, that is available to deliver directly to you, or we do have a storage facility that is 100% licensed and insured, and we can literally hold your gold for you. We can trade it for you. I've had tremendous success in trading gold over the past couple decades, and then on top of that, we will not charge you any commission, nor will we charge you any part of your profit. So I think the next run in gold is coming. We're getting very close. We've had a couple closes above 1350, but that's not the important number. 1380 is the important number, and two closes above that would signal to me that we've got a new bull market in gold, and that market could literally take off and run. Now, when you buy gold through my company, if you buy gold, for example, at 1380 and it goes to 1381, you're in profits. There is no commission, there is no spread, there is no additional charges to you whatsoever. I would very strongly recommend that you contact us if you have an interest in protecting what you have and making money in the gold market.
Profit and protect. That is where we're at today. Profit and protect the money that you work so hard for. 1-800-432-1022. That's the number to speak with Harold at. 1-800-432-1022. And it's 100% confidential, anything discussed. His website is rarecoloreddiamonds.com. And I think the way things are being set up right now, we could see some fireworks this year. 70% of fund managers see danger ahead, the highest percentage since the financial crisis. The recent turbulence on Wall Street, which pushed the U.S. stock market into its first correction in about 2 years, seems to have soured fund managers on where the economy may be heading. According to the Bank of America Merrill Lynch Fund Manager Survey for February, 70% of those polled believe the global economy is in its late stage, the highest such reading since January 2008, right as the financial crisis began to gather steam. The late part of an economic cycle typically coincides with the market's peak and precedes a decline into recession. Now, according to the Wells Fargo Investment Institute, which in early January suggested the U.S. economy was poised between the mid and late parts of the business cycle, this stage is marked by moderate growth, tightening credit, a peak in confidence, higher inflation, and an acceleration in the rate of interest rates rising. Sounds very similar to where we are today. Some of these factors appear in the current cycle. Now, investor optimism recently hit a 7-year high before dropping to a 3-month low in its latest reading. And a recent report showed wage growth coming in at the fastest pace in more than 8 years. That raised concerns about whether inflation could be returning to the markets after years of dormancy, and those fears sparked worries that the Federal Reserve could become more aggressive in raising rates. Morgan Stanley coming out and saying the stock slide was an appetizer for the real deal. The U.S. stock market only had a taste of the potential damage from higher bond yields earlier this year, with the test yet to come. And it's interesting to note this morning on CNBC.com, and it's an interesting story. Art Cashin, a well-known trader on the floor, he says, once the 10-year yield hits 3%, all hell could break loose. And right now, the 10-year yield, and this is something to keep an eye on, is 2.90%. It could be a bad day for the markets once the yield on the benchmark 10-year Treasury hits 3%, said Cashin. The 3% level is both a target and a kind of resistance. Everybody knows it's like touching the third rail. And that's the thing that people are keeping an eye on, Harold, that 10-year. And if it does go beyond 3%, it could get very, very interesting in the stock market very soon.
And if you're heavy in the stock market, which is something that I personally wouldn't be overly comfortable with, you need some type of protection, either stops in the market or owning an asset that will offset the losses that, could come in the stock market. Don't forget, we still have a lot of landmines out there. Right now you've got a stock market that's rallying no matter what happens. It doesn't matter what happens in this world, as long as they don't, something doesn't happen to the actual building or whatever on Wall Street. The fact is that the market just does its own thing. It seems to brush away every problem and everything, which is why it's so difficult to predict that market. So the fact is that the Dow has gotten so expensive that the middle class can't even afford to be in that market, just like they couldn't afford to be in Bitcoin, when it went all the way up to 20,000. Bitcoin has gone from $20,000. First of all, when it first came out, it traded at a few dollars. You imagine owning a cryptocurrency when it first came out and seeing that currency go all the way to $20,000? But now it's become so volatile that it's down to 9,000 and change today. but it was down to 7,000. It actually dipped below 7,000 earlier in the week. So you're talking about one of the most volatile markets in the world. The only type of cryptocurrency that I would ever consider would be a crypto that is actually backed by a hard asset. We all know that currencies are backed by nothing except the good word of the government that prints that. In the United States, their currency is backed by the good word of the U.S. government. And if for whatever reason the U.S. government went under, like it almost did in 2008, the currency would be almost worthless. The fact is that when you look at these cryptocurrencies, like Bitcoin and cryptos like that, they have no backing. There's nothing. Absolutely zero. It's nothing but a crapshoot. The only type of cryptocurrency to ever own would be a current cryptocurrency that is backed by a hard asset. So, again, at this particular point, the world financial markets are crazy. You don't know which way to turn. On one hand, a lot of people are on the sidelines. They're looking to get back into the stock market because it's going up almost every day. But the fact is that the risk keeps getting higher and higher and higher. So again, I urge you, don't just jump in. The general public always makes the wrong move, always get into the market at the tail end of its run, and always end up losing its money. Don't leverage your money. Don't take unnecessary risks. And don't go into a market that is so high at this particular point without knowing what you're doing. So again, there's not too many markets out there at this point that can give you any type of return because interest rates are basically at about 1%. And obviously you cannot make money when interest rates are at 1%.
We really believe now is the time to start building another position in gold or adding to your position based on what we're seeing in the United States. Harold has a metals program, and he'll be happy to speak with you about it. Connect with him at 1-800-432-1022. His website is rarecoloreddiamonds.com. Get our free weekly newsletter. It's the companion to the podcast. And this week we have a lot of very, very good information, even on a short week, because it was a holiday in Canada Monday, as it was in the United States, President's Day. The United States paid up to auction $179 billion of debt in the span of hours on Tuesday. Of course, the government was almost shut down. They were running out of money. The Congress did pass a plan to keep it going for 2 years. And as a result, they need to raise money in the markets now to shore up their balance sheet. It should be interesting to note, too, that Donald Trump came up with a budget for 2019, and they're talking about deficits of $1.5 trillion a year, with the debt over a period of time, 5 to 10 years, going to $30 trillion. And this is where it gets really interesting. In our free weekly newsletter, we have 2 articles that should concern people. Debt cancer. More than 80% of American adults owe someone else money. And they say, how long can our debt levels keep growing much faster than the overall economy? We haven't had a year of 3% growth for the U.S. economy since the middle of the Bush administration, but we keep borrowing money as if there's no tomorrow. Much of the focus has been on the exploding debt of the federal government, and that's definitely something that needs to be addressed in Washington. But on an individual level, U.S. consumers have been extremely irresponsible as well. In fact, one new survey has found that more than 80% of all American adults are currently in debt. And to give you an idea, there is a number, and we have the numbers in our free weekly newsletter. Here's the breakdown. Americans have debt at present of the baby boomers, 80.9%. Gen Xers, 79.9%. I'm in that group. Millennials, 81.5%. And there are so many people that are drowning in debt. This is a must-read article. Get it from Harold. He'll be happy to send it out to you in our free weekly newsletter, 1-800-432-1022. It's a companion to the radio program, the podcast. And what I can say to you is you can go through this in mere minutes and be completely up to date. And you're going to know exactly what happened during the week financially. It's important now to be educated. Listen to the podcast, get our free weekly newsletter, educate yourself, because you need to profit and protect the money that you have. Now, the other story that I think is so important, and you can see this coming. So they're racking up more debt in the United States, big deficits, and interest rates are going up. Ooh, we've got a problem here. Goldman Sachs sees U.S. interest costs surge on yield and deficit rise. A historic expansion in U.S. borrowing during a period of economic growth alongside rising bond yields will cause a surge in the cost of servicing American debt. Now, a lot of what has been done in the past with all the debt and deficit during the George W. Bush days and the Obama days was done on very, very low rates, emergency rates. Well, that is starting to change. Now, according to Goldman Sachs, federal fiscal policy is entering uncharted territory. And they say that one of their analysts, Alex Phillips in Washington, wrote in a note to clients, in the past, as the economy strengthens and the debt burden increases, Congress has responded by raising taxes and cutting spending. This time around, obviously with Donald Trump, the opposite has occurred. Because the average maturity of U.S. debt is almost 6 years, rising yields will take some time before they send the interest rate the Treasury pays to borrow above the growth rate of gross domestic product, Goldman estimates. When that does happen, it will send the ratio of debt to GDP, which is already elevated, climbing further from about 77% now. If current fiscal policies are extended, and Goldman is saying they predict that the U.S. net interest expense relative to GDP will exceed the level seen in the 80s and early 90s, and by 2027 you could really have a full-on problem. A debt to GDP ratio will probably hit 100%, putting the United States in a worse fiscal position than it experienced in the 40s or the 90s. So, Harold, they're actually making a prediction. They see the 10-year going out in the region of about 3.5% to 3.75%. And as a result, you're going to see the United States have to be paying a lot more money on the debt that they owe on. And as a result, it's going to have some serious ramifications for the U.S. economy. And that's the thing. Obviously, the hope is what Donald Trump did is going to bring in a whole bunch of money, tax money. But that does not necessarily happen. So it will be interesting to see. We saw it in the past with Ronald Reagan and the trickle-down effect. It didn't necessarily trickle down as well as that they had expected. And even it was done in past administrations with past U.S. presidents. But it is a concern when you start to see these high debt levels, and when interest rates start to go up, look out, because they're going to be paying a lot of money to service that debt.
And I'm shocked that they don't, talk about that or realize it, because it's as obvious as the nose on your face. So you're 100% right. If they're going to raise interest rates at a time when the debt is the highest that it's ever been, not only for the government, but for the citizens of the U.S. and in Canada, similar, it's only making it much more difficult to get by. In Canada, you and I have always talked about why the government is raising interest rates when there's hardly any inflation. There's a real estate problem. And on top of that, the debt in Canada per individual is the highest in history. So let's go ahead and raise interest rates and make, everybody's life even that much more difficult. It makes very, very little sense to me, but a lot of the things the government does doesn't make sense.
Very chaotic times, and that's why we believe in hard assets, something that you can hold in your hand. And if you'd like to learn more about the gold program that Harold has in place, connect with him at 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Now, one of our charts of the week in our free weekly newsletter, Toronto strains, and as a result, they drove a 14.5% plunge in Canadian home sales. Canadian home sales plunged the most in a decade last month, driven by fewer transactions in a Toronto market squeezed by tougher mortgage lending rules and higher interest rates. And I was just having dinner with a friend of mine, and he was going for another mortgage, and he was saying that, Randy, it is getting very difficult when it comes to mortgages to get one. It's not like it used to be. You could fog a mirror in Canada and they would give you something. They're very, very strict. Now, in the United States, sales of existing U.S. homes unexpectedly fell in January. And where am I taking this? Well, British Columbia is once again, with their new NDP government, ramping things up to clamp down on the housing market. British Columbia's Finance Minister Carol James says she doesn't want her province and the housing market there to be used as a stock market. So she's digging deeper into the toolkit in an attempt to thwart speculators. The tax on foreign buyers is going up immediately to 20% from 15%, and it's being spread beyond Metro Vancouver. And an additional bold new levy will be imposed on domestic and foreign speculators, all part of a 30-point plan that nearly doubles the number of measures introduced by Ontario last year in their 16-point fair housing plan. She pointed out the biggest money makers among BC's 30 housing moves is the increase in property transfer tax on the value of homes above $3 million. The strategy is expected to generate $81 million in revenue per year. Most importantly, some of the questions to consider: are the additional levies enough to scare off foreign buyers? And will those foreign buyers hopscotch elsewhere in Canada? There was a very interesting note from Business Insider this week, Harold. The Palo Alto Weekly recently asked residents of a ritzy Silicon Valley city, how do you define your social class? They found that more than 80 people living in Palo Alto, they earned $400,000 a year, which that's big money. Not in Palo Alto. $400,000 a year in income. They consider themselves middle class. Residents acknowledge that while they may be rich elsewhere in the United States, they still cannot afford to buy homes in the Bay Area. And that is the challenge of what's happening in British Columbia, what's happening in Toronto. People struggle to be able to afford homes. And just imagine, Harold, you're making $400,000 a year and you cannot afford to buy a home where you live and even consider yourself middle class. It's really stunning.
Certainly is. That's San Francisco and Northern California for you. Very, very expensive area to live. No doubt. Anyways, again, the markets are trading in a range, but we're very, very optimistic that the price of gold is going to take off. Again, if we're very close, we're only $50 away. You could see a $50 move in gold at any given time. Given the right situation, gold could very easily take off. And again, we're very strongly recommending that you look at owning physical gold, not paper, not anything else, but owning the physical product itself. And I think that we've got the opportunity to get into another bull market. You know, before the government stopped the last run in gold in 2011, gold was on its way to 2,500 till they thwarted the move. I think the next time the gold starts to make these type of moves again, because don't forget, when gold went to 1,900, it started at 250. This time, this bull market's going to start at about 1,380. It's quite possible that if things get bad and Trump, you know, something happens to him as far as being thrown out or impeached or whatever, you know, is going to happen because of this Russian situation and other things that he may get himself into. Those are the type of situations that could really rock the market. You could see the Dow plummet and see gold just take off again. And I think there's a very, very real opportunity that that's going to happen.
Speak with Harold personally, privately. 1-800-432-1022. Find out about investing in hard assets, gold, silver, diamonds. Harold's website for diamonds, rarecoloreddiamonds.com. It's like going to an online museum with the finest diamonds and jewelry on the planet that you can invest in. And Chris Delgado, a jewelry expert, said jewelry is an investment. You can wear for 30 years and then sell. What else can you do that with? And Richard Russell, before passing away a few years back, said another high-class area of transportable tangibles is diamonds. And diamonds can be transported, $10 million worth of diamonds in the cuff of your trousers. So yes, diamonds, gold, silver. Speak with Harold about hard assets, and I'm in agreement with Harold. I think now is the time to start accumulating a position, especially when we have a gold-silver ratio at 80, and gold and silver looking very, very attractive. In our free weekly newsletter, I know that we have some strong stories about investing in gold. In fact, Jeff Clark with another article, Why Now is the Perfect Time to Be in Gold and Silver. We'll be happy to send that article out to you, and you can read what he has to say about the gold market, but he is very, very bullish on gold and silver. Before we end today's program, I thought it was interesting to note a couple of different things, and a few of them are quite sad in a sense. In Venezuela, Venezuelans report big weight losses in 2017 as hunger hits. Venezuelans reported losing an average of 24 pounds in body weight last year, and almost 90% now live in poverty, according to a new university study on the impact of a devastating economic crisis and food shortage in Venezuela. Also, 1 in 5 Americans have more credit card debt than savings, and that is obviously a huge problem as well in the United States. But on the fun side of things, a couple of different notes here. They're actually going to be auctioning off Rolex Daytona watches coming up a little later this year in Geneva. And another watch that's going on the block, and it made news this week, Elvis Presley's Omega wristwatch, set with 44 diamonds to hit the block. Phillips, in association with Bax and Russo, has scored another celebrity watch coup with Elvis Presley's Omega watch, which goes on the block during the auction house's Geneva watch auction, May 12th and 13th at the Hotel La Reserve in Geneva. At a charity event and concert in 1961, RCA Records, Presley's label at the time, presented him with the 18-karat white gold dress watch set with 44 brilliant cut diamonds on the bezel to mark his impressive achievement of selling 75 million records. The watch was purchased at Tiffany & Company and features the retailer's signature on the dial underneath the Omega designation at 12 o'clock. But Harold, this is going up for sale. We know what the Paul Newman watch did at over 17 million. I think it was at 7.8 to 17.8 million. Just imagine what Elvis could do, because his fans, they are rabid collectors when it comes to Elvis memorabilia.
You better believe it. That's going to be a tremendous watch to own. I was a big fan of Elvis Presley. Saw him in Las Vegas when he was heavier, but still one of the great entertainers of all time. And I'm probably one of the only people that, Randy, that saw the Beatles back in 1965.
Wow.
So, anyways, that should be very interesting to see what Elvis's wristwatch goes for. I'm sure it's going to go for a fortune.
And Harold, as we close off today's program, any thoughts on diamonds? It was a fairly quiet week for diamond news. Obviously, the world is really focused on the Olympics and the shooting in Parkland. Trying to find information on diamonds, not a lot out there. We do have auctions coming up here in April and May, so we'll get an idea of what colored diamonds are doing. But overall, I'm sure you're encouraging people to take a look at the diamonds, investment diamonds you have at rarecoloreddiamonds.com.
We have a very, very unique opportunity in pink diamonds because 95% of pink diamonds come from the Argyle mine in Western Australia. That mine is getting ready to close before 2020, so it's less than 2 years away. We believe that this mine that produces 95% of the world's pinks is going to cause pink diamonds to really increase in price substantially. So we're excited about the diamond market. It's a great hard asset, and we strongly recommend that for the long-term investor, rare colored diamonds are a phenomenal investment.
Pink diamond prices have tripled over the past 15 years, and on average would be at least 25 to 30 times the value of white diamonds, according to David Farden. He's the CEO of Lindley's. And between 2002 and 10, the index for diamonds from the Argyle Pink Diamond Tender increased 108%, while white diamonds rose 22%, according to Josephine Johnson, and she's with the Argyle mine. And we find, and they don't give out the numbers for the Argyle pink diamond tender, but the tender that just happened at the end of 2017, that was one of their most successful tenders ever when it came to the price of diamonds going out the door and rarity. So Harold, thank you very much for another fascinating show and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend, very profitable day.
Connect with Harold, 1-800-432-1022. Get our free weekly newsletter. Find out about his investment program that he has with metals, gold, and definitely take a look at rarecoloreddiamonds.com, some of the finest investment diamonds for you. Now is a time for hard assets. When you're seeing what's happening in the United States with the deficits and the debt and geopolitical concerns around the world, you need that insurance policy in your portfolio to profit and protect the money that you have. That's it. Another edition of the World Financial Report podcast with me, Randy Marshall, and Harold Siegel. We will talk to you next week.